Today, we're going to be cutting through some of the usual market noise and taking a look at a really fascinating analytical tool. It's called Trend Impulse Channels, and it's by a creator named Zeiierman. You can actually find this as an open source script over on TradingView, which is pretty cool. We're going to go over what this indicator is and how you can use it in your trading. It's designed to give you a fresh perspective on identifying and following trends, moving beyond those smooth, fluid curves you often see, and instead presenting price movements in a more structured, almost stair-step-like progression. If you happen to find value in this video, remember to leave a like. Now, to get started with this indicator, you first of all want to go to TradingView. That's the trading platform I'm going to be using. If you need to sign up, there is a link in the video description for you to do that. Next, you want to load up whatever chart you like, any security, any time frame. Then you're going to click on Indicators, search for Trend Impulse Channels, and it's going to be the one by Zeiierman. Go ahead and add that to your chart. Ladies and gentlemen, this is the all-powerful Trend Impulse Channels indicator. It's a really comprehensive tool, a precision-engineered trend following system that's all about visualizing how a trend progresses in discrete, clear steps. It uses something called volatility-scaled step logic, which sounds a bit technical, but it basically means it helps you see the trend's momentum by defining these clear trend steps. And it only registers these steps when the price action really confirms a shift based on an ATR trigger. So it's great if you like a more structured view of the market instead of just fluid lines. So what are we actually looking at on the chart? Well, the main thing you'll notice is this sort of stair-step line that moves with the price, and a channel that forms around it. This isn't your typical moving average. Instead of a smooth curve, this indicator uses what it calls volatility-scaled step logic. It's designed to replace that vague idea of a slope with really clearly defined trend steps. Think of it like turning the market's usual squiggly lines into a clear staircase. This gives you a much less ambiguous map of the trend. The channel itself, those upper and lower bands you see, isn't static either. It actually adapts to what the market's doing, widening when things get volatile and tightening up when it's calmer. This is because the channel width is based on ATR, or average true range, which is a standard way to measure volatility. You might also see some signals on the chart. There are optional circular markers that pop up each time the trend takes a new step forward. These make it super easy to spot those moments of trend continuation. And then there are triangle-shaped retest signals that can appear when the price comes back to touch the outer bands of the channel. These can be really handy for spotting potential pullbacks or areas where the price might react. Now, let's dive into the settings because you can really tweak this indicator to fit your style. First up is the trigger threshold, which is based on ATR. This setting is super important because it defines how far the price actually has to break through its current state to register as a new trend step. A lower value here will make it more sensitive, catching smaller moves, while a higher value will filter more out, needing a bigger move to signal a new step. Then there's the max step size, also ATR-based. This basically puts a cap on how big any single step can be, stopping the indicator from drawing massive runaway steps if volatility suddenly spikes. It keeps things manageable. The band multiplier, ATR, controls the width of that channel we talked about, how much breathing room you want the bands to give the price. There's also a trend hold by bars. This is the minimum number of bars the trend has to stay going in one direction before the indicator will even consider flipping. This can really help cut down on noise and those annoying whipsaws. And finally, you can choose to filter by trend. If you turn this on, those retest signals we mentioned will only show up if they align with the overall trend direction the indicator is showing. So for example, you'd only see lower retests in an uptrend. This helps you keep focused on higher probability setups. All right, so how can we actually use this Trend Impulse Channels indicator in our trading? Well, the cool thing about this tool is that it's built on a pretty fundamental observation about how markets often behave. After a strong move or impulse, the market tends to go into what you might call a cooling off phase. This is where people might be taking profits or some counter trend traders jump in. It often looks like a shallow pullback or just a stall in the price. The key thing is, these cooling off phases don't necessarily mean the trend is over. They're often just temporary pauses before the next leg of the trend kicks off. It's like that rhythm of impulse, then a pause, then another impulse. This indicator, by tracking these discrete trend steps and by helping to identify this pause behavior, really aims to help traders get in sync with that natural market rhythm and potentially spot some solid trading opportunities. So for actually trading, there are a few main ways you can approach it. First, and most obviously, is for trend alignment. You can use that main step line and the circular step markers to get a really clear visual confirmation of which way the momentum is heading. If you see multiple trend steps happening one after another without the trend flipping, that's usually a pretty strong sign of conviction and that the trend is likely to persist. It helps you stay on the right side of the market. Next up, you can look for retest-based entries. This is where those triangle signals come in. The idea is to wait for the price to pull back into the channel towards one of those upper or lower bands. Then you watch for those triangle retest signals to appear. If you see one, and importantly, if it aligns with the overall trend direction that the indicator is showing, so especially if you have that filter by trend setting on, that could offer you a potentially higher quality setup for a trend continuation. It's all about being patient and letting that setup come to you. And thirdly, you can use this for spotting breakouts. You'd be looking for the price to make a decisive move beyond the upper or lower band, especially after it's been consolidating or pausing within the channel for a bit. Now, for a higher chance of success with these breakouts, you generally want to look for them to happen in the direction of the already established trend. So if the trend is up, you're looking for a breakout above the upper band. This adds a layer of confirmation. In summary, the Trend Impulse Channels Indicator by Zeiierman is a really unique tool. It moves away from traditional smooth moving averages and instead gives you the structured stair-step view of trend progression, which is scaled by volatility. It's all about helping you see trend direction, potential breakout conviction, pullback retest opportunities, and even consolidation zones with more clarity. By understanding its core idea of the market moving in impulses and pauses, and by using its clear visual cues like the steps and adaptive channels, it can really help you align your trades with the market's natural rhythm and potentially spot some solid trading opportunities. Now, just remember, all the information in this video is for educational and informational purposes. This is not financial advice. The strategy ideas we talked about are built around this indicator, but you should always add your own price action analysis, fundamental research, or other confluences before making any trading decisions. All trading and investing involve risk, and you're fully responsible for the decisions you make. If you found value in this video, remember to leave a like, or even better, consider subscribing to stay tuned for more videos. Thanks for watching, and I'll see you next time.